When looking to close option spreads, it can be pretty confusing to know if you're putting in the correct order for the type of spread that you're trading. Robinhood will even ask you what kind of spread that you want to close, which can be confusing to new traders. In this quick video, I want to explain the ways to close spreads so that you can be confident when you hit that send button. What's up guys, welcome back to Modern Options, where I'm here to teach you how to trade options to create a better quality of life. If I have any new investors out there that want me to feature their free stock sign up link, be sure to comment that below and I'll advertise it in the beginning of my next video so you can hopefully get some free stocks. So this is a topic that can get really confusing, but if you just think about it logically, it's not too hard to grasp. Anytime you open a spread one way, meaning you either pay a debit or take in a credit, you're going to close it the opposite way. Also, anytime that you place an order, whether it's closing or opening, I always recommend at the minimum that you set a limit order as opposed to a market order. That way you determine the best price that you want when you plan your trade. Robinhood will do this by default and will actually only allow you to place limit orders on spreads. Thinkorswim allows for a few more options, but for the purposes of this video, we'll just stick to limit orders. So Robinhood will place this banner up on your screen before you make some trades sometimes, and it only comes up if your option legs are really close in price or have some weird price action going on where they're just inverted for some reason. So for a debit spread, the goal is to pay when you enter the spread and you will receive credit when you get out of the spread. So that means that you hope that it rises in value. For a debit spread, you want to make sure that you place that limit order above the price that you paid to enter. I mean, that's just assuming that you're taking profit. Now, if you're trying to exit the position at a loss, obviously you're going to have to place that limit order a little bit lower if you're trying to just lock in your losses and go on to make another trade. But when you're going to close a debit spread, if that banner pops up on your screen, you want to click credit. That means that you will receive money back when you close the trade. Now for credit spreads, you open it up receiving a credit. So that means when you go to close this trade, you want to pay a debit to close the trade. So for credit spreads, the obvious goal is to sell high and buy low. So the limit order that you place for a credit spread needs to be lower than the price that you took in for the credit. Again, assuming that you're locking in profit. So if you took in a credit of $1 and the price is getting close to 50 cents, you can go ahead and place a limit order at 50 cents and it will not execute until the value of that spread gets at or below 50 cents. So let's look at a debit spread that I recently opened up on Palantir for 28.5 and 29. So my average cost was about 20 cents. So since I paid 20 cents to enter this, obviously my goal is to close it at anything above 20. So when I go to place my closing order, I only have one of them, so I can only sell one of them. Let's just say I want to make 50% profit on this trade. I could go ahead and place a limit order for 30 cents. And then you can see there, it's showing that my minimum credit that I will receive is $30. Since the prices of the legs are pretty far apart from each other right now, it's not going to give me that option whether I wanted to receive a credit or pay a debit. But just know that since I'm placing a closing order on a debit spread, that means that I want to take in a credit. So you review and you'd swipe up and then you'd be good to go. So now let's go to a credit spread I currently have open on AT&T for the 29 and 28 puts. I took in a credit of about 15 cents. So that means I want to close it by paying a debit anywhere below 15 cents. Go ahead and place a closing order. I have one available, so I'm going to put in one. If I wanted to come out with on or about 50% profit, I'd place a closing order at 8 cents. At 8 cents, and that would mean that my max cost would be $8. So since I opened a credit spread and received money up front, that means that I will pay a debit or pay a cost to close the spread. So you want it to be lower, so $8 would net me about 50% profit. So since it was a $1 wide spread, I had $100 locked in collateral, but then once I close this trade, it will release that $100. And then swipe up to submit. So I currently have a credit spread open on Plug right now on Thinkorswim, so if I wanted to go set a closing order for that, I would click on both of the option legs, click close selected. I want to buy the vertical because I don't want to sell or buy the individual leg. I want to do them both at the same time. So then go ahead and click close. And at this point, it's the same as Robinhood. Go ahead and place my limit order at a price that I'm comfortable paying a debit for to close the trade. and then click confirm, go through and click send. Alright guys, that's a pretty basic video on setting limit close orders. I'm trying to make my videos not too long so you can fit them into your busy schedule. If this video helped you out at all I ask is you leave a like on the video. It really helps out small YouTubers grow their channel. As always, leave a comment below if you want more clarification on anything that I discussed. I'm putting videos out every week, so make sure you subscribe so you don't miss out.